Hey guys, this is Prashant Rao, founder of retailtrader.ai. Last couple of weeks, the market has been extremely brutal, and particularly towards the AI stocks. I spoke a little bit about that in my previous video where I said we might be seeing a major correction or a bear market in the coming weeks. So I wanted to follow up and tell you what I think or what my opinion is on what will happen going forward. Now, when you look at the landscape, there are a few people that still believe AI is hype. So I'm certainly not in that camp, and I would highly encourage those that are skeptical to think otherwise because the value of AI is clearly real. And I've seen it in my personal experience because 98 to 99% of the code that I've written, since over 6 months ago is completely written by AI. And it's a huge differentiator. So there is no doubt that this isn't a hype. So let's strike that away. Now the question becomes how long is it going to take before all these bigger AI build-outs and data centers that are being built out actually happen? There are a few major challenges that the data center build-outs are encountering, which is slowing things down. And the key issue is around energy. So there isn't quite enough power to run these data centers without bringing down the grid. And many communities have been seeing their bills increase, and rightfully so, they've been pushing back on the data center buildouts. Unfortunately, the war in Iran hasn't been very helpful, and that has increased the gas prices quite significantly. And that means much more household pressures, and it's very likely that the protests would increase going forward. So that is one of the major risks, in my view, for the data center buildouts. And being in tech, people are often used to faster cycles. So clearly, it's quite possible that most tech companies that are trying to build these have largely underestimated what it takes to build that physical infrastructure that is needed. So those are, I think, the key issues around the data center buildouts. Now let's look at the technicals in the market. So there are many people that believe, okay, we have gone too far, the correction has happened, and we're just going to bounce back and everything is going to be all good. I certainly don't believe that's going to happen. From a technical standpoint, although I never usually look at moving averages and backward looking indicators, sometimes during steeper sell-offs, it really warrants a look because most of the major players do look at these indicators. So the key thing that I notice is that a majority of the stocks have fallen well below the 200-day moving average. Normally, that's a sign for one to go out there and buy stocks, which is what I see a lot of commentators saying, and I follow other traders on X, and they're all saying the same thing. The probably missing is that what I'm seeing is that there's a huge gap between the 50-week and the 200-week moving average across these big tech in particular. And the 50-week is still moving, and the distance between the 50 and the 200 are increasing. And that's not a great sign. That means that we're probably still not done with the sell-off. Now, even if we are done with the sell-off, it is highly likely that we're going to chop around for an extended period of time. So I don't expect markets to go up instantly like many people might be thinking. So that's my view from a technical standpoint. Now, it's always good to have a view of the fundamentals as well as the technicals, because that's what really gives you the edge in the markets, rather than just being taking a one-sided view. So then you're in a place where you can look at the market behavior and assess whether your thesis is right or whether the market is right. Right? So it puts you in a much better place than most people. I think all in all, there are a few other points as well. One is if you look at the AI companies, the ones that are in the foundational space, When you look at SoftBank and OpenAI, we are seeing a lot of increased leverage. Even just the other day, I think SoftBank was going to add 40 billion more, take a bridge loan, and they're already over leveraged, and now they're over leveraging even more. So there's a significant amount of risk in the private credit market, and SoftBank is more than 50% off its highs. And when you normally see a big company or a big stock like that being 50% off their highs, that tells you that there is something that's fundamentally wrong. And it's normal to see 20% corrections, or maybe it might even go to 30, but at 50, there is definitely a structural issue. So that is the risk to watch out in the AI space. Now, if we do see a rally and we see some kind of a final blow off, the ones that are going to do well, in my view, are not the AI companies. They're probably going to be the shovel sellers, as I call them, and not the ones digging for the gold. And I've talked about them before, and we talked about companies in copper, aluminum, energy companies. These are the types of companies that are involved in the data center buildouts that are actually going to win, because it's going to take a while for the other companies to realize the gains from all of the buildouts. So that is my view on what I think is going to happen. And I'm a big fan of Ray Dalio myself. I've actually been, reading about him. I read his articles pretty regularly. You can see me liking some of those on LinkedIn as well. I have his original book on the principles when he first began to sell them, and he used to give away these pens, I think, with some kind of a signature. So I do follow him pretty regularly, and I just read a recent article where he was saying the same thing, where he thinks the people that are betting on the technology are not the ones that are going to win. So I think what he's referring to is basically the shovel sellers, but we'll see. So that's the thought that I have. And amongst the positives, some of these risks that we have in the geopolitical space, where US allies are drifting away, and the Iran war is ongoing, these things could change in an instant. So one has to be aware of that. So if gas prices start to go down, and we reach some kind of a spectacular deal with Iran, and the allies come together, all of which could happen really fast, we might see a different result. So keep that in mind, and I hope you found this useful, and I will see you guys next time. So leave your comments below. I love to hear other people's opinions, so look forward to that. Thanks.